Good day, ladies and gentlemen. So right now I'm in a GBPUSD trade, and as you can see, I'm on the 5 minutes time frame. Okay, I'm on the 5 minutes time frame. So I want to give you the reasons why I entered this particular trade. Okay, I want to give you the analysis behind it. The strategy I'm using is the what's it called, supply and demand zone strategy that I taught you. And when I taught you that strategy, I told you that there are three things that must, be in place for you to have a solid supply or demand zone. Okay, so the very first thing that must be in place for you to have a solid supply or demand zone is that there must be aggressive movements from that particular zone, and that aggressive movement must do what? Must break structure. Okay, so this is the aggressive movement I saw that made me mark up that particular zone. So let me point at it. You can see a lot of red candles coming in, red candles. That's an aggressive movement. You can either have a big candle or you have smaller candles moving in the same direction. All right, so the aggressive movement also broke structure, because if you check, you would notice that you have a support around here. And what did the movement do? It broke that structure. So there must be aggressive movement and a break of structure. That's criteria number one for you to have a solid zone. Okay, so one of the reasons why your zones don't work is that the zone you are drawing, yes, there is movement from the zone aggressively, but there is no break of structure. So everything has to fall in line. There must be aggressive movement and break of structure. So that criteria is met. Now, the second criteria is there should be a fair value gap just before the zone. So let me zoom in and show you the fair value gap I actually saw. Okay, so fair value gap is a situation whereby you have three candles following each other, and the wick of the first candle does not does not intersect with the wick of the third candle. Okay, and I have that just here. You can see the wick of this candle. Let me point at it with this. You can see that the wick of this particular candle does not intersect with the wick of this third candle right here. There is a space in between them, and that is that space that we are calling fair value gap. Let me see if I can use two blue horizontal lines to depict them quickly. Okay, so let me copy this horizontal line. Good. Now where are the candles? Okay, so this is the first candle, and you can see that the wick does not intersect. There's a small gap in between. Okay, so you have these three candles. This is the first candle right here. First candle, candle number one, candle number three. So the wick of this third candle and the wick of this first candle do not meet. Putting an horizontal line across, you can see that there is a gap in between. This gap between these two blue lines is what we call FVG, fair value gap. So criteria number two is what is satisfied. There is a fair value gap just before my zone. Okay, so these two red lines is what I use to depict my zone. These two red lines here is what I use to depict my zone. All right, and for you to draw your zone, if you have watched the video where I talked about this powerful supply and demand strategy, your zone is always the last bullish candle before the before the downward movement. That's if you are drawing supply zone. While for demand zone, it's going to be the last bearish candle before the upwards movements. So this one I have right here is the supply zone. Okay, so I'm looking to sell when price come back here. Okay, which is exactly what I did. All right, and you can see this is the last bullish candle. So I drew an horizontal line across the boundary, top of that candle and bottom of the candle. So that's my point of interest. Once price comes back into this place, I'm looking to sell. Definitely I'll place my stop loss above that level, which is what I did. Okay, so let's go. Now, I've given you the two criterias. First criteria, there must be aggressive movement and break of structure. Second criteria, there must be a fair value gap just before your zone, because fair value gaps are known to attract price back to that level. Okay, then the third criteria is that market must have some kind of pause it must not approach the level back aggressively, because an aggressive approach is tantamount to the zone being disrespected. If you just have an aggressive move towards the zone, there's a high chance that the zone will be disrespected and the aggressive move will just go past the zone. Okay, so we expect some form of pullback while market is coming back to that zone, and that's what we have. You can see market has started coming back to the zone. It's rested a bit here as if it went sideways. It's good. Okay, that's good. Okay, showing that you don't have an outright aggressive move towards the zone. Okay, so you have that. Let me snooze this. So you have that. Okay, so when price entered that zone, again, I entered my sell trade right here. I have to sell trades. You can see where I entered my sell trade. My stop loss was placed above the level. Okay, I think I have about 7 pips stop loss and 14 pips take profit. So I'm going for 1 to 2 risk to reward ratio. Basically, that's what I did on this particular trade. Okay, so I'm in a little bit of profits. I'll definitely let this trade run out to know how it goes. You can see very small profits. It wasn't too long I took this trade, and I'll see how it's gonna go. All right, so if you are a new viewer, please subscribe and turn on the notification bell. If you got any question, you can ask in the comment section. I'll do my best to answer. I'll see you in the next video. Thanks for watching.